Hello everyone, today I'll tell you how to trade effectively with a small deposit and why a small deposit is not a sentence for a trader. If you have a small deposit and you think it limits your opportunities, then this video is just for you. A small deposit is a reality for many beginners, and it's hard to grow your capital when there are only a few dollars, 50, 100 in your account, right? Even though everyone often faces this, and I'll go further, I actually recommend starting with this kind of money, because you won't be able to make a critical mistake, lose a huge amount that could seriously affect your life, or do something else foolish. Many traders, they say that it's impossible to do anything with a small deposit, but I believe that's not true, and that you should start with a small amount. And the ability to trade with small amounts of real money, most importantly not on a demo account, gives us very valuable experience. And with the right approach, a small deposit eventually turns into a large one. Beginners often make a big mistake. After depositing a small amount on an exchange or with a broker, they immediately start using high leverage. In other words, instead of learning with small amounts, they try to make money right away and quickly grow their deposit. This is wrong. With a small deposit, we should be learning how to trade. But what do we do instead? We start trying to grow our deposit quickly. Why? It's unclear. What does this lead to? Of course, it leads to losing everything. High leverage is a violation of risk management. There are situations where we can use higher leverage, such as during low volatility, but that doesn't mean using 30 times or 40 times leverage. If we're trading with 1 times to 3 times leverage, then on Bitcoin we might go up to 6 times, 7 times, or 8 times, but never 30 times, 40 times, 50 times, or even worse, 125 times. Inexperience and lack of knowledge often lead to poor risk management. That's what I'm talking about, and this makes the situation much worse. By the way guys, I'm preparing a scalping study guide for beginners, which will have modules for everyone, and I'm putting in a lot of effort. Let me know in the comments what you think about this. Today, I'll explain how you can trade with a small deposit and gradually grow it. In other words, how to make a profit over the long run. And at first, these earnings will seem laughable, starting from 30, 20, or even 10 cents up to $2 or $3. By the way, I'll make a couple of trades in this video and we'll see how much we can earn with $100. We'll have a mini trading session. Trading with a small deposit requires a special approach. It's not just a scaled down version of trading with a large deposit. Here, what's really important is precision, discipline, and speed in decision making, because with a large deposit we can afford to fall a bit short somewhere and still take profit, or hold on a bit longer and leave some behind. Even from just that part, the income can be substantial, which is not the case with a small deposit. Although a small deposit is essentially a complete copy of a large deposit, meaning you should always treat your deposit as if you have Imagine you have $100,000 in your deposit and treat it that way. For example, if we enter with 1% of $100,000, that's $1,000, right? So we enter and take a profit of 1%, which is just $1,000. On $100, that's just $1. You feel the difference, right? But with every profitable percent, our deposit grows, and so does our income. During your initial learning period, you should value every dollar and take every dollar the market gives you. There's no need to chase huge moves. You should focus on scalping, doing exactly what you would do with a large deposit, but on a small one. With a large deposit, we might try to stretch for more profit to live off it, but with a small deposit, our main goal is to learn first and then grow it. So every next dollar increases your future income. For example, 1% on $110 is $1.10, while 1% on $100 is just $1. Every extra $10 already increases your next income, so you need to understand this. There's no need to rush to grow it. It will grow on its own once you find your trading strategy. By the way, there's a great new video about trading strategies that will really help you. Don't forget to check it out. It's also important to understand that with a small deposit, you can't afford to take big risks. Again, this goes back to your desire to quickly boost your deposit. We are not boosting here, we're trading. Boosting is different. It's when you take a small amount and deliberately try to grow it fast, knowing you might lose it. What we're doing is trading, where you might make just $20 in a month on your $10. Of course, those who are more experienced can make more. Someone might get lucky somewhere the market is good or something else happens. But what can high leverage do to us? It can simply knock us out of the market. If these $100 are truly important in your life, you can't afford to enter trades with 10 times or 20 times leverage, because you could lose everything in just one trade. Now imagine with 1-to-1 leverage, you would need to lose 1% 100 times in a row to lose your deposit. Of course, the math is a bit different because your money keeps decreasing, but it's roughly like that. 100 losing trades in a row, it's unrealistic. If you sat me down right now and told me to make 100 losing trades in a row, I wouldn't be able to do it. And our goal is to stay in the market as long as possible with those $100. So set limits for yourself, restrict yourself, and there's no need to use high leverage. With the goal of doubling or tripling your money or something similar, for small deposits it's important to choose the right strategy. For small deposits I recommend, both for learning purposes and for the simplicity of the trading strategy, to focus on trading bounces. I used to trade them and I still do. I didn't start with them, I started with breakouts, but logically ended up trading bounces since breakouts didn't work for me, but bounces were consistent and I learned to spot them and trade them. That's why I recommend this approach. It really boosted my knowledge and experience. You should definitely focus on short trades. There's no need to sit and try to squeeze out 3, 4 or 5% from a trade. Sometimes you'll get that, sometimes coins will be volatile. By the way, when trading volatile coins, learn to reduce your position size. Not increase it to try to multiply your gains, but rather decrease it so you get a normal profit even on super volatile coins. This will be an important skill for you in the future, because being able to control your position sizes is very important, especially based on volatility. So the point is to focus on short trades. Anywhere from 0.5% to 1.5% is a perfectly good trade. A lot will also depend on your stop loss. You should never let your losses run. Remember what I said, no one can make 100 losing trades in a row. That's practically impossible. So there's nothing scary about your stop losses. After a stop loss, profits will follow. A stop loss of 0.3 to 0.5%, for example, and a profit of 1.5%, 1.2%, 1.3%, or 2%. It will cover everything, so you shouldn't neglect it. Also, of course, I recommend, since I'm a scalper, to definitely use a trading terminal, because knowing how to use a terminal is very important. It really simplifies our trading and it makes it much faster. From making a decision to executing it, we have very little time. We don't need to type anything in. We don't need to set anything up. Everything is pre-configured for trading. We just click. Everything is done through hotkeys, through the mouse. Everything is as simple and fast as possible. This is extremely important for scalping, for trading rebounds, and for trading with a small deposit, because we need to make quick trades one after another. Of course, the settings absolutely must be configured in advance. Even if you trade using charts, sometimes there are order book walls, especially at key levels and during rebounds. This is doubly important for us. By the way, I want to mention that order book walls are currently performing quite well. That's why it's important. Detailed order book settings will also be covered in our training program. In other words, you need to have your order book configured, your volumes set up in advance, the order book depth adjusted. All of this should be done beforehand. You should sit down and be fully prepared to press buttons, enter and exit positions, add to or reduce your position. Everything should be set up and ready to go. If you're not sure that you'll be able to do something on the fly, for example, when I spot a chart pattern, I can enter a position even with an unconfigured order book and then quickly set it up afterward. This has happened more than once during streams, and it happens in practice too, because sometimes you have to make a decision instantly after entering. You enter quickly, open a position, and then rush to set everything else up. Because we can always set a stop loss even with an unconfigured order book. So, what is the difference between trading with a small deposit and trading with a large deposit? With a large deposit, you can afford to trade more aggressively and take on bigger risks. But those risks, you see, will be smaller as a percentage of your deposit compared to if you only had $100. For example, if we enter a position with 3 times or 5 times leverage, we can even use lower leverage when trading with a large deposit. So, if we have a deposit of $10,000, we can enter a position for $5,000. This will already mean reduced losses. We can enter positions for $2, $3, $4, or even $7,000. In other words, we are reducing our risks even further. But this by no means implies that you should immediately go for a large deposit. In fact, I recommend starting to trade with your small deposit, just like I did back in the day. And now I already have several backup deposits. I could combine them into one and trade with larger volumes, but for now, I keep them as a safety cushion in case I get caught by some sudden spike, pump, or something like that. Which of course is very unlikely, but it could still happen. I choose to feel as calm as possible because I have things that allow me to feel that way. For example, having several backup deposits. As for a small deposit, it's all about strictly following risk management. You can't overextend anywhere because we can't enter with a smaller volume. In some cases we can, yes, for $50 if we have $100, but we can't enter for $10 or $20. Very few coins allow us to do that, so there are fewer trading options, but basically it's the same. That's why there are few differences, as I've already said, and we should treat a small deposit exactly the same as a large one. So now let's move directly to trading bounces and try to find something to trade. I don't know if we'll end up with a profit or a loss, we'll see. And yes, I forgot to mention, as I said throughout the video, $100. We're taking $100 and we'll be trading with that. Guys, I want to remind you that for active scalping, I use Tiger Broker to save on commissions. I get 35% cash back on commissions from every trading session the next day. For any crypto operations as well as medium-term trades, I use the Bybit exchange. These are my two main tools for trading. If you don't have an account yet, make sure to use the links in the description, sign up, and get the maximum bonuses through my links. So friends, how do we select coins for trading? As you can see, I already have the RD coin open. This is a situation I wanted to trade, not just for the video. But now I'll explain the logic behind how I selected it, and why I decided to show it to you in the video after all. First of all, I want to mention something in Tiger Trade, now called Tiger.com. Yes, they've done a bit of rebranding. Right here you can see this feature called filters. And to filter out unnecessary coins and leave only the more active ones with higher volumes, we go into the filters and add a filter here. As you can see, it will say none everywhere here. So we click on turnover and greater than and enter 200 million. You could enter 150, yes, but still. I even enter from 100. I just decided to put 200 here for the video so you could see, but I usually look from 100. When there are no setups at all, I can go for smaller coins. I've said this many times. I'm not a supporter of trading only coins with super high volumes. Sometimes there are coins with great setups, but without big volumes. I don't go for the most illiquid ones where the volume is just 5 million, but still, coins with 50, 70 or 80 million can also be considered for a breakout of some interesting level or a bounce from a liquidity wall, especially since on less liquid coins, liquidity walls work much more interestingly. So this way, we've immediately simplified the list of coins we can watch. Why did I highlight the buyer zone here, from which I'm going to enter a long now? Because there's a level here that was broken, and now the price is coming back to retest it. So you can enter from the retest, but I would enter the first part from the retest. Let me immediately put in 3,147. And from the upper boundary of the zone, I'll add the rest of the volume. As I mentioned earlier in the video, we use up to 3 times leverage. So with $100, since we have a small deposit, we enter $100 here, okay? And spread out our limit orders. We enter from the retest at 3,148, place the first limit order, then I place 31 and 3 for the other 2 limit orders. So in this range, we build our position. These are the kind of limit orders we place. Probably it's better to disable trading by chart and wait for the setup. What else can I add here? Why did I decide to add more precisely here? I'm counting on a small fake out of this retest because there's a zone below. If there was a liquidity wall below, I would also enter from the wall. This often happens, a breakout setup, when we're waiting for a breakout, and the same often happens with a bounce setup, when we're waiting for a bounce from a level, but there's a liquidity wall a bit above the level, so most likely there will be a fake out and a bounce from that wall. You need to keep this in mind, set up your order book and watch it. How to set up the order book will be covered in separate lessons in the course, of course. We'll go through everything in detail there, how I set it up and how I use it. For now, in this video, we won't focus on that. So these kinds of situations happen and you definitely need to watch out for them. Where am I going to place my stop loss here? I'm going to set my stop loss here even before the zone is broken. Here, I'll set the stop loss roughly at these levels. So the stop loss will be about 0.6% with a potential gain of around 1.8 to 1.3%. We wait. Also guys, while I'm waiting, I have another order in mind for June. This level for a bounce at 6,648. I'll take it on the bounce, so I've marked it and I'm waiting. Pay attention. For now, I'm waiting for 2 situations. I've marked them for myself. I'm waiting and I'm not getting into anything else. That's the essence of trading. Find your situations and try to work them out and don't get involved in anything else. Yes, we can scroll through and look for something according to our strategy, but if there's nothing, you don't need to short or long just because AVE is dropping right now. And we'll take it. We'll enter a short. No, you shouldn't do that. That's one of the main mistakes. So we're just waiting for 2 situations. Let's place the orders right away. 6,648 for a short, a little before the level. 2 orders and 1 for a breakout. 6,677 and we wait. The order didn't go through for us, but we can't influence that in any way, so we just wait. If it gets filled on uni, then I'll enter and immediately remove the orders here. It's important to keep this in mind and not forget to remove those very orders. This is very important, guys. While we wait for the order, there's another interesting situation on UNI. From the low, there's an attempt to recover the price, and on its test, I'll enter and open a long at 6,329. And here we'll place orders like this for buying. We've spread them out, now we wait. We'll try it this way. We have 3 times leverage, so 3 orders after all, yes, like this. We wait. So friends, the coin has approached, some kind of slowdown is starting, and I'll open the first order here right from the current price manually because I didn't set it before the level. Although as I'm talking now, it might open anyway. I still opened one order because there is a slowdown at the level. And as a new candle opens, I decide to fully open the position, remove the orders, and set the stop loss to break even. As I said, the slowdown has already reached the level itself. Here, literally 2 ticks were missing to reach it, and now there's a full-fledged bounce happening. So far, everything is basically going according to plan, except for what could have happened. Due to the lack of liquidity, there was a slight move below the level for a stop hunt, but it didn't happen. It was clearly visible how the price hit a wall and wasn't moving any further. Only the candle's wick pops out, which indicates a local buyback. We're already pulling in 0.36% plus $1, and basically there's nothing complicated about it. With a good deposit, you could already start locking in part of the position because our goal here is to catch a small reaction. A small reaction means that 0.5% is already quite enough for us to open a position. Initially, as I said, I wanted to wait for the upper boundary, catch a bounce from above, but the price never reached it and the market started to drop. We also have an order building up here. There could be a local stop hunt and a stop hunt into our zone, followed by a bounce, meaning an exit. Here, they're running a stop hunt at the local level, hitting the lower boundary and then popping back out. I won't be removing my orders here either, and I'm waiting for some kind of resolution to the situation. If it gets filled, it gets filled. If not, then not. We're already in a position on Yun and just waiting. We're not doing anything. The only thing we can do is set a stop loss. If we're expecting about 1.5% here, then a stop loss of 0.5% suits us just fine. Right now, it's giving us a plus of 0.6%, so yes, I can set exactly 0.5% from here. So our potential is 1 to 3. We watch and wait. So guys, our order is also getting filled. You can see it here on the chart. I accidentally opened the position manually. I wanted to remove the signal level, but it didn't work, and the position was opened. I closed it immediately, right away. It wasn't a profit or a loss, just an accident, and one of our orders is getting filled, or maybe 2, and here I'm removing it. I'll set it for a breakout, just in case, 2 orders right here, and we wait. As for Yun, it's still trading at the moment, nothing has changed, I'm keeping it under control. So, we're watching guys. Yun closed just now and gave us about 1.5% from our positions, roughly 1.4 to 1.5%. The order is at break even. It was close to the stop loss, but didn't trigger it. The next one is giving minus 0.14. I'll wait a bit longer, and if anything, I'll close it. In any case, we're already in profit, just waiting for the outcome of this situation. The power 9 trade, or the fingers, is around 0. I'll be closing the position. I've been sitting in it too long, there's no point, especially since Yun gave a good profit. I think it's best to close this trade. Here it's a minus of 30 cents, and in that trade a plus of a little over $3. So in total we managed to take a plus of 1.5% from 2 positions. So we managed to make 2 trades like that, and let's move on. So guys, that's how our trading went. We took a small profit. Well, actually not that small, almost 4% from 2 trades. One was break even, the other was profitable, and we're up about $4, a little over 3 in just a short period of time. If you could do that every day, just imagine, you double your account in a month, and so on. Of course, not every day will be profitable, and you shouldn't get upset about that. Losses are a normal part of the system. I want to say that the most important thing, of course, is discipline. Discipline is the key to success. Always stick to your trading strategy. Even if your emotions are getting the better of you and pushing you into unnecessary situations, don't do that. 2 days in profit, 1 day in loss, 3 days in profit, 1 day at break even. These ups and downs will always be there. But over time, you'll start to understand that this is normal. The scariest losses are when you lose half your deposit or your entire deposit. Even losing half your deposit isn't as bad. What's really scary is when you lose it all. You'll end up hating yourself, blaming yourself a lot, so it's better not to let that happen, that's all. A common question is, how do you avoid it? Just don't do it. Trade with small leverage. Maybe you increase it a little. If you're trading with 3 times leverage or 4 times leverage and you see the coin is weak, okay, maybe 5 times. If you're trading a highly volatile coin, use only 1 times leverage. When you start messing around, you can't even adjust your trading strategy. But when you do the same thing every day, like I always trade with 3 times leverage, with this stop loss, with this risk reward ratio, and I try to stick to it. If something doesn't work, you start making adjustments. You can only adjust if your actions are consistent. Add something, remove something, tweak or exclude things. But if your actions are always random, you can't even adjust your trading. That's a big downside. As for risk, I've already said, don't take unnecessary risks. Don't keep increasing your leverage. Keep learning. Watch my channel. It's very useful. Watch other channels you like, though I don't know who to recommend, but learn to filter information. That's very important. And don't trade everything you see. Try to test strategies over a certain period. In our field, in scalping, there aren't that many strategies. Everything revolves around the same principles. So pick one, test it, see what suits you best, and try trading with it. Don't give up if your first attempts aren't successful. Every professional trader started with a small deposit. That's what you're doing now, and I'm showing by my own example that there's nothing wrong with it. Everything will work out. You'll have $10,000 deposits too. So guys, we talked a bit about how to behave, how to trade. I showed you an example of trading with a small deposit. I hope this video was useful for you. Apply this knowledge and your capital will definitely grow. Good luck with your trading and see you in the next videos and on the streams.